July Dubai real estate property market update, and this is from Property Monitor, who puts together all the research and data. So I'm just going to read you July's report here. For the ninth consecutive month, the Dubai property market continues its stellar run, with property prices in July rising 1.9% on a monthly basis. The average property price per square foot now stands at 941 dirham, levels last seen in Q2 2019, as the market claws back previous price falls. So prices have risen 11.8% this year and are up more than 15% since this time last year. Although growth has been very strong, we expect the pace of recovery to slow over the rest of 2021, moving to a more sustainable pace across Dubai. Looking across the world, double-digit price rises have been seen in the UK, US, Canada, Scandinavia, and parts of Europe, so the local recovery is very much of a global trend as the world recovers from the pandemic. The rate of prices rises and demand remains varied between communities in Dubai, so care must be taken when you're investing and choosing where you want to live. So the high end of the market, that is prices over 10 million dirham, which is 2.7 million US dollars or 1.97 million pounds, continue to generate superior interest, with another record transaction taking place in July, a villa in Jumeirah Bay Island, which sold for 121 million dirham. That's 32 million US dollars or 23.8 million pounds. We also saw this 10 million dirham price tier making its strongest performance on record, expanding its share of the market to 3.4% in July from 2.3% in June. So with this high level of interest in the 10 million dirham market pricing bracket, the number of available properties, as you can imagine, has naturally reduced. In the broader market for villas and townhouses too, we've seen instances of sellers and agents pushing for higher prices, which may prove unrealistic. This has led to many of these overvalued properties sitting on the market for an extended period of time. And in contrast, if the property is priced correctly, then we've also seen agents altogether skipping the listing process on portals because they're directly taking properties to their most serious qualified buyers and selling off market. Sales of villas, though, still the most popular upper tier property type, seem to be dwindling. As quality and well-priced inventory dries up, we really are running out of great stock. The Palm Jumeirah, which has consistently posted record sales, started to witness higher apartment sales in July compared to villas in the 10 million dirham pricing bracket. Overall, villas do continue to dominate the majority of the 10 million plus price bracket in Dubai, with 75 villa sales recorded among the 117 total transactions in the category. So for July, there was a total of 4,455 transactions following a strong June. On a monthly basis, sales have slipped over 30%, given the truncated trading month on the account of the long Eid al-Adha weekend. On an annual basis, sales have increased 80% since last July. There was a block of delayed registrations from previous months recorded from Azizi Developments in July, including off-plan and initial sales from the developer. While this was a notable contributor to the rise in sales volumes for the month of July, even without these deals, the market recorded one of its best July performances for transactions since 2009. That's phenomenal. So off-plan launches, though restrained, are beginning to attract higher demand. A total of 1,820 off-plan transactions were registered in July, down nearly 25% on a monthly basis, but up by a staggering 144% yearly as off-plan activity resumes after a lull. The process of launches also seems to have changed, with many developers doing away with the traditional queuing system. They're now pre-issuing tokens for purchases in new launches and are vetting or qualifying potential buyers through issuing a token. And this means that when your agents are really telling you to get in the queue, it is no longer a joke, they do mean it. Completed properties took 59.1% market share in July 21 versus 40.9% for off-plan, extending the year-long trend as buyers demonstrated a preference for ready-to-move-in properties. However, completed property transactions are starting to give up some of these market share gains as new project launches are gathering pace. Off-plan market share has a steadily increased from the 28.4% low recorded in January this year. The volume of mortgages declined in July, down 13.6% over the previous month, at 1,845 transactions. So a total of 32.9% of loans taken were new purchase mortgages, with the average amount borrowed being 1.85 million dirham, which is up 4% from June, with a loan-to-value ratio of 74.3%. A further 38% of mortgage loans were for refinancing or loans taken out in months post-transfer, and these were more predominantly for bulk mortgage transactions taken by developers and large investors. So the low interest rate environment in place since the onset of the pandemic on a global and local level has boosted property purchases and the uptake of mortgages. However, as inflation continues to gain prominence, one cannot rule out potential interest rate hikes which immediately impact rate-sensitive sectors such as real estate. Given that the dirham here in Dubai is pegged to the US dollar, any rate decision taken in the US to curb inflation will be mirrored here in the UAE market. And after recording a few months of weakening yields, Emirate-wide average gross rental yields were back above 6%, which is great news out there for all of you landlords, after touching lows of 5.8% in June. This does suggest that property rents are beginning to increase in lockstep with property prices after months of moving in opposite directions. So that's the fabulous market update for July. And if you want any further data or information on certain type properties, locations or communities, do pop me a WhatsApp message and I would love to respond on a personal level to you. Take care. Thank you for listening.